Stock buyers, for now, they've ended their romp. And the bonds, led by junk, they're taking a womp. And that Senate version of the tax plan, I call bullsh frog. Whatever happened to drain the swamp?
Well, I'm going to the city and I'm gonna do a steady show. And I know all my fans wanna learn how to make some dough. I've been cruising up and down for trades each and every night. And with my iPhone reclining, I know we're gonna get it just right. I'll get inside your mind, we'll have a real good time. We're gonna trade today, we gotta trade today. Go askSlim.
Hi, I'm Steve Miller. Call me Slim. And this is the askSlim Market Week. It's a look back at what happened in the financial markets in the past week, and a look forward at what might happen in the next week, and hopefully lots of great ideas and opportunities for you throughout the show. Well, the stock market edged lower this week, with some signs that, well, buyers are getting tired. Stocks got support early in the week as oil moved up, energies moved up, and world markets were still firm. The Nikkei gained strongly as the Bank of Japan continues to, well, want to kill the yen, and that has certainly given a lift. Of course, they keep buying stocks too, and ETFs. The tax plan has to be something that is getting investors a bit nervous in here, and that's in question. And I think it did make investors at least slow down their buying or stop their buying, except in selective stocks. The Senate version, which just came out, has 7 tax brackets. The House version had four tax brackets. So the House reduced it from 7 to 4. The Senate reduced it from 7 to 7. And the Senate wants to delay the corporate tax rate reduction, the one that's going to 20%, all the way out to 2019. And the House, well, they were getting rid of the death tax, and the Senate only wants to double the death tax. So what that means is that, you know, companies that have grown from people that have built them over many years, that probably small companies overall, that if the person that owns it dies, then essentially the family is going to have to sell something to be able to pay for that tax. It, of course, hurts the small businesses, hurts businesses that are going to hire people, and it's just I don't get that tax whatsoever, the death tax. And I'd love the idea that the Republicans, the House version, that they were getting rid of that, and now it's simply the Senate says that the government is entitled to a big portion of your money if you've been really successful when you die, not your family. Let's take a look at the 60-minute chart of the ES, the S&P 500, as we look at what happened in the overnight session and during the day. So this is that chart of the ES. That you can see, well, it's, in the early part of the week, we had the market be able to, hold up. There wasn't any really sizable gains going on. We had a pretty good day here on Monday as oil surged to the upside. That led the energies, and basically could see not a lot of news during the week at all. Here's where that Nikkei pushed up to the 25-year high, and that led the markets up. But on Tuesday, the Russell was down big as the financials fell. The Russell was about 18% weighted by financials, a lot of them small ones, and then the Russell started to fall. The Russell's been having a hard time over the last month. Wednesday, really no news. It tried to get back up to those highs. You can see that. And Thursday, there was the market was trying to get up overnight, but there was a big crack in Japan on the Nikkei after having all of those gains. It drops a quick 850 points to the downside. It did recover a lot of that, but investors got nervous, and you could see the sellers started to come in overnight, and then it was having a bad down day. S&P's down some 25 here, but then had the strong close, and the buy the dippers were still out there in form. And here on Friday, well, we had weak bonds and a lot of tax plan jitters going on based on, well, what I just told you. And we have a market that opened lower, but has been, as usual, trying to creep its way back. I just noted that there's a flag pattern forming in here. We'll see if it breaks out on the upside, as this one did right in here, or it breaks on the downside. So the jury's still out on that one, as we're here with about an hour and a half left to go in the day for the stock market here and for this week. So that is a look at that 60-minute chart, and you can see what has happened during this week. So the stock market, it's been firm, that's for sure. And it's interesting to see that the junk bond market, well, that's been taking a pretty sizable hit. I got an email from my buddy Tony in Mexico, who sends me some great stuff, and he made a point to say that he wanted me to look at the relationship between junk bonds and the stock market, because he said that there was a correlation there. Of course, it makes some sense, because when the junk bond market is strong, well, there's some speculative juices going on. That's extremely high yield bonds and represents a lot of maybe lower end companies, and they would have benefited from the tax plan, certainly, and they still might, of course, but all of a sudden the junk bonds are getting hit. So the question is, does that also mean that, based on the correlation, that the speculative juices are coming out of the stock market also? Let's take a look at a 2-year chart in here and compare the two, and I think you're going to find something really interesting. Tell you all about this. Here is that 2-year chart right there, and you will see here that there actually is a correlation between the S&P 500 and junk bonds. And I actually showed you the little dips that occurred when the junk bonds dip. But let's start at the beginning of the chart, when the last big correction came in the stock market right in here. That was 2 years ago right there, where you had some very sizable 17% plus correction right there. That actually is the stock market here. That was the junk bond market in a big break. So the blue line there is the stock market. The red candlestick chart is the junk bond market. So I want you to see the relationship in here. Certainly they moved down together right in here. Actually, there was an upside move in both of them right at that point, so you could see the correlation. This decline was 233 points in the S&P 500 from a much lower level. So you could see that was a sizable correction. Then we got into a rally, and see this little dip here in the junk bond market right there? That correlated with a 63-point little dip in the S&P 500. Junk bonds down in here and some pretty sizable selling, and right in here S&P 500 fell 102 points. Here you have a blip down in the junk bonds, and here you have a 56-point little dip there in the S&P 500. Same thing right in here, a little dip in junk bonds and a 56-point dip in the S&P 500. And here you have, well, they're throwing them away pretty good here in the junk bonds. Now remember, this is a weekly chart. The daily chart looks a lot worse, and the S&P 500, well, it's just barely rolling over. So far, only an 11-point dip. I think what you're seeing in here is that the stock buyers, the S&P 500 investors, they haven't quite yet gotten the message that the junk bonds are falling apart. There is a correlation, as you could see right there, and as soon as they get the message, well, the selling will likely come in. Is there a significant drop coming in there? Is it a 233-point drop like we saw back a couple of years ago? Well, I don't know. Is it like the 56 to 60 something points that the S&P fell? That would be like 2%. I'd say that's highly likely. And it is highly likely that that dip will be a lot bigger than that. So that's the correlation between junk bonds, which are now coming apart and also hurting the treasuries right now, and the S&P 500, which looks like it's ready. I'd say a drop coming, wouldn't you? So now what we're going to do is something a little different. I'm going to show you an infomercial. And this infomercial, well, if you're a askSlim subscriber, you might have seen this already. And my level 4 members who get my charts, well, they're getting this. What this is a new indicator that we've developed. So if you're not interested in new indicators that can raise your probability of success very significantly, then you're going to want to speed by this. But if you are interested and you want to see something that, well, I think is really good, then stick around and watch this special on our new indicator. Hi, I'm going to take a few minutes to show you our new option bias indicator. I think you're going to find this really interesting. I've been an option trader since I started on the CBOE in 1974. That's 43 years. And since that time, I've learned the importance of momentum, not standing in front of that moving train. And that can be really expensive. In this world that we live in right now, things are really momentum driven. That's greatly affected by the involvement of central banks and high frequency trading, and the depth of the markets that we've seen in here have really taken the noise out of the market. You've seen these long upward trends and low volatility. So understanding momentum, in other words, those trends, is really important. I've been testing this new indicator now for about a year, and we've been using that and reporting when this indicator has told us when things have gotten extreme, overbought or oversold. And for our level 3 members, we've been showing our option bias rankings on the table that they get every single day. But now we have it available as a study that can be used on the thinkorswim platform. And I think it's just unbelievably valuable. I wanted to create a study that would help with option bias. In other words, directing our option positions, and that's very valuable for strategic option traders, those people that are trying to take advantage of the decay in options. And what happens, of course, is that those positions get tested a lot. In other words, they get in the money and then they become losing positions, and you have to figure out, whether you want to roll them or take them off, and it becomes really complicated. And it would really help if there was a way to tell whether or not you can bias your position in one direction or the other, or when there is an extreme and it makes some sense then to fade the move, to then become a contrarian, to not do that too soon, as a lot of traders really do. So essentially, I wanted to find something that keeps traders out of trouble, keeps you in the right direction. So we built this study, and it takes in effect the intermediate term momentum, the short term momentum, and also the extremes in movement. So it's a very complex study that we built here using multiple time frames. It's, I think, extraordinarily unique and very valuable. I'm going to show you examples of this, quite a number of them here, so you get a good understanding. Now, this is used on the thinkorswim platform. So if you're not a thinkorswim member and you're seeing this, well, you want to contact me potentially about getting our link to become a thinkorswim member. So, of course, that's TD Ameritrade, and thinkorswim is the platform that they use. So let's take a look here at some examples of this powerful study, and I'll show you how it works. There are 7 different readings, and it's really easy. And take a look at this. The first one I'm going to show you is IBM, where you look at the IBM chart on a daily chart, 6-month chart. Here is that chart. So everything that I'm going to show you is on a daily chart, 6-month chart of IBM. So on the bottom is the indicator with some notes on it. The rest of the charts I'm going to show you don't have all of these notes, but I want you to get a sense for the 7 different readings and what they mean. So the first reading that we're going to see or the first readings are the positive readings. Anytime you see it up here, that's essentially where the 3 is. That's P3. That's what it is the most positive period. In other words, there's an upward bias, and that upward bias is likely to continue. Whenever you see this P2, in other words, these are dark green and these are lighter green, then what you get is a sense that it is getting slightly overbought. In other words, P3 is the most powerful upside move. P2 says it is getting kind of a little bit overbought, and that you might be watching for it to stall out based on that getting a little bit overbought. Now, when it turns yellow is when it goes neutral. So you can see in here that you had a positive reading right there, and those were all positive readings, and it was a little bit overbought. And here is where you had a little decline, and it went neutral at that point. Then what happened after that was that you got into a period of negative bias. So what happened was that right here, you can see where it went N3, and that's exactly on this date right over here. It told you that the internals have deteriorated enough that there was an alignment between the intermediate and the short-term patterns that had turned negative. And you can see what happened in here in IBM. It began to fall right during that period. It got, slightly oversold during this period right over here, giving you some indication that the downside may be ending in there, and you could see it started to slow down. And then what happened over here is the N1 reading. When you get to N1 orange, it says it is extreme oversold and a reversal is pending. You can see that you had 3 days in a row of that reading, and then what happened was it made the bottom and it started to move up. Fantastic right there. Now, when it turns yellow after an N1 reading, it essentially says that the N1 reading is gone, but the momentum from the extreme oversold condition can continue. So that's exactly what happened in here. Now, at some point you're going to say, I don't know whether it's going to continue or not. But then when you get the P3 reading, it says the internals have improved again and that it goes positive. And you can see this great positive bias right over there. Now, note that right over here on this date, right there, when it had the big upside gap, it went to P1 orange, which says that is an extreme overbought condition. That says that it is likely that you will get some kind of a reversal soon, and you can see what happened here in IBM. It reversed right after that. So here was your N1 orange reading, and then it reversed. Here's your P1 orange reading that says extreme overbought, and then it reversed after that. So this was a clear indication of great signals here on the option bias indicator. I'm going to go through a number of other ones in here for you that you can see, and you will be able to tell the value of this. Let's take a look at Costco, C-O-S-T. And you can see in here are the readings. Now, we don't really have, I didn't put all those notes in here, but I'll just go quickly for you to see. Here is the period right in here of P3 where all the internals were positive and it was rising. Notice actually that we had an island reversal right in here. During the island period, it got slightly overbought. Then it got extreme overbought, warning that there would be a downside reversal. It actually had a breakaway gap on the downside, and then established itself as extremely negative. In other words, this was mildly oversold right over here, and this was extremely negative period over here, and you can see that continued on the downside. You got a neutral readings right in here, and actually a positive reading right in there, and then it went neutral again right there. So you can see that all of these readings right through here were positive or just slightly overbought, and there was a gap in there, but pretty much you can see uptrend in here and an uptrend right in here. And the best value of all was during this period over here where you had the breakaway gap on the downside, and this signaled it perfectly, and it signaled when it would continue to move down. So great reading on there on Costco. Let's take a look at American Airlines. You'll see right in here that it also gave you an excellent reading. All of this period was positive right in here. You could see that positive to only slightly overbought. Right over here is where it went P1 orange and warned of a reversal. You could see that happened right in here. And then the reversal came. It was really strong. Here is where your N1 readings are, and it said it would continue sharply on the downside, or the potential for that was there, and that continued that way. And here is your extreme oversold reading right over here, and saying that it's likely that you'd get a reversal. You got a double bottom, extremely oversold, and then that gave you the reversal. So great reading in there also in American Airlines. Let's take a look at Google, G-O-O-G-L. Great readings. I mean, this is just exciting when I look at it. Now, Google was a little bit choppy, right? So you can see right in here, through this period, all right in here, this was where it was mostly negative right there. You can see that. And this is the period right in here where it had a really hard time moving to the upside. It neutralized right in here and went positive right here. So this is the period that it was positive right there. All the way through here, it got a little bit overbought a couple times, but nothing to be worried about. Then it gave that shooting star, and right in here, it shows that the likelihood is strong that this is going to reverse on the downside because it has now gotten to extreme overbought here in Google. So just a very, very clear look at how that looked. The next three I'm going to show you are positive readings that were incredible. In other words, it says that all of the internals were positive. This is just unbelievable in Boeing. There was never a time all the way back here for almost 6 months that we had anything but just incredibly powerful internals. It never got overbought once. It never gave you any kind of a warning that it was getting overbought. So in other words, it was internally correcting, and it continued upside during that whole period right there. Just amazing, the quality of that. You would never want to be on the short side when you get a P3 reading like that that never changes. It makes no sense. Caterpillar, almost the identical situation, even more positive. Never during this whole time period did it ever give you a sense that it was anything but positive in this whole 6-month period that we're looking at. Never once getting even the smallest bit overbought, just powerful on the internals. The emerging markets, look at that. Got neutral a couple times, but basically in these little corrections right in here didn't really mean very much, and just positive the whole period of time there in emerging markets. You think it only works on the downside? Take a look at the dollar, DXY, and you can see right in here that during this whole period, during this decline, the internals almost the whole period were extreme negative. There was a couple of times where it gave you little warnings that it was getting a little bit oversold. Remember, it has to be orange to be warning of a reversal. And then it went neutral right over here and went to +3. In other words, that's where it's turning positive, and it's been moving up this whole time. It's giving slight warnings here that it's a little bit overbought, but nothing significant. Again, it would need to turn orange and go to this 1 level to warn you that it is rising and extreme overbought. That has not happened in here. So you can see negative during this period in here, neutralizes, and then positive during this period in here. And man, that sure kept you on the right side of the market when you look at that in the dollar. That's absolutely fantastic. Let's take a look at one commodity in here just so that you can see how it works in the futures. And let's take a look at gold, how this worked. So let's get a little closer look right in here. And you can see that, well, what happened? Gold was positive right in here. It got a little bit overbought, but nothing significant. You didn't really have a good signal in here until this moment right over here where it turned red. That's N3 red, and that said a momentum had clicked in the internals on all time frames. However, not oversold, slightly oversold in here. You didn't get an orange reading at all, but it turned up. Here's where it turned positive, P3. It says it's likely to continue to move on the upside. You can see that. This is the date right over here. It gave you a little warning, was getting overbought. That's this right in here. And then right here on this date right here, it warns you that it is extreme overbought and likely to turn around on the downside. There is your reversal. Here's where it continues down. Here's where it turns N3, in other words, very negative. This rally in here did not change it, so it's likely to fail, and you can see that, and it continues on the downside. So just absolutely extraordinary indicator when you look at that. Certainly nothing is ever perfect, but I would say that that one is really amazing. You can look this over if you're a level 4 member, because you'll be able to put that right on your charts. It gives you a great sense of the bias. In other words, how do you direct your option positions, and when exactly do you want to fade so you don't fade too soon. And when you get those orange readings, N1 or P1, that's the time it's the highest probability that in a few days you're going to get a change of direction. Some of them are brief change of direction. Some of them, as you could see, are long periods of change of directions, and are, basically, even in this strong trending market, we're getting better than 2-to-1 in reversals. So it's just an amazing reading. This was built for option traders and to keep you in the right direction of the market and keep you from getting run over. But you can see it's great for swing traders also. That's the askSlim option bias indicator. We've been working on it for a year. We finally got the script written. It will be available to our level 4 members. Those are our members that get our charts sent to them every single week for their thinkorswim platform. If you're not a thinkorswim user, well, you can still have those by becoming one, by opening a TD Ameritrade account, getting the thinkorswim platform, and you can do that by sending an email to slim@askSlim.com, and then I'll send you our special link for you to open an account at thinkorswim. Amazing indicator. I hope you found that as interesting as I do, and as valuable as I do, and I'm sure that all of our members are going to love. So again, option bias indicator, that's new, and you can have it. Thanks for listening. All right, if you have any questions about that indicator we just showed, I think it's just phenomenal. And just send me an email, slim@askSlim.com. I'll be glad to answer them for you. All right, best and worst stocks for the week coming up. Mostly the big movers were in the retail category. Of course, they've been super depressed stocks, and now some of them are getting a bounce. One of the stocks that was on my list of worst stocks for the week was the biggest mover, all the way up into the $3 range from the $2 range. Of course, that is JCPenney. JCPenney getting a bounce in here as their loss was not as big as everybody feared for the quarter, and of course we're coming into their quarter, the Christmas season coming up, so they'll earn some money then, and that's, in my opinion, not any real reason to buy them. And you can see our projection is that the stock declines into January. If you're new to cyclical Analysis, well, essentially what we're looking at is the money flow. In other words, money coming in and money coming out of the market, and it comes in a somewhat regular basis. So these are the ideal time frames right in here, and it points to where the cyclical low periods likely are, and this one is not out until January. So stock on my worst of the list for the year. At the beginning of the year, when I said it was going to $2, it was over $8, and sure enough, it made it down to $2.35. So one of the best calls that you'll ever see, I believe. Next one is Macy's. Excuse me while I pat my back for a second. Macy's up 11% on the week. Earnings beat. Guidance was strong in there. And you can see also this points to a low, not until end of December. So we think these are fake bounces in there. Talk about fake bounces. Also, you can look at Dick's, DKS, and Dillard's, DDS. Both of those stock looks like fake bounces to us, and we would sell them. I think those rallies are pretty doomed to failure. Now, I'm going to talk about some retail stocks right now that I think are buyable. They're good-looking stocks right now. Nordstrom was trying to go private, and they announced that, and the stock popped, and they went ahead, I think, and tried to raise the money to do so, and found that tough. So they at least suspended, for the time being, their effort to go private. Now, the pattern in here in JWN is, to me, at the spot where it's likely to start to move up, and there are little signs of that right now. Here is JWN. Now, their earnings this week beat, but the analysts downgraded it and downgraded their targets on this. And I think they're wrong. I actually, if you look at this cyclical pattern where you could see this declining phase, you could see that right in there, and this one right in here, well, that says that this one is about to end. So we're looking for Nordstrom to come up, and don't be surprised if you see that some announcement comes out that they're sniffing around for financing again, and that stock starts to pop. So we think that Nordstrom, based on this analysis, and based on the fact that they were trying to get the financing done, we think that's it's in an area where it's a high probability that it's going to go up rather than down. Take a look at Lululemon, LULU. Our subscribers caught this one this week. As you can see, what we were looking for, let's just take a look at these last three cycle patterns right in here. What we were looking for was a low to occur. So you can see the low right in here at the nested bottom and then up. The low at the nested bottom and then up. And this spectacularly strong pattern where it couldn't come down very much and then up. Here's a big upside move right in there as the stock is immensely strong. Take a look at this daily chart right in here. What we liked was the bullish pattern and the bull flag right in here, and you can see, well, it exploded out of that bull flag. We've mentioned this stock in the past. We hope that you did well in that one. We called the breakout, and sure enough, it did occur. One more stock in this category that we're going to look at is Kors, K-O-R-S. Now, this is a stock that, well, there's a daily chart. You can see it exploded to the upside. I'm going to switch over to the weekly chart so you could see the cyclical patterns. They're up by 4% on the week. This was all about very strong Asian sales. And why do I like this stock? Well, everybody would say it's gone up so far you wouldn't want to buy it. Maybe that's the case. But the patterns in here are suggestive of, as you could see, we are projecting a pullback in there. However, if it does pull back, we're figuring just around the $50 number in the next month, and that's where the bottom is due. So we wouldn't buy it now, but we'd look for that pullback. This is an immensely powerful pattern. Normally, when you get a big up move and a small correction, you get another big up move. So we want to wait for that dip and buy Kors. A couple other stocks we're going to look at here in the best of the week. Some news out on Disney that was interesting. Their earnings, they were not very good, actually, and people have been selling the stock under the assumption they wouldn't be very good. But the stock actually is up 3% on the week, and the reason for the gains is that they are going to be releasing their streaming app with Star Wars, all that Star Wars content that they have, And their streaming prices will be a lot lower, they're saying. Now, I don't know the numbers, but a lot lower than Netflix streaming prices, who just raised their prices. Now, I've been cautioning on Netflix, and I'm going to show you Netflix in the worst of the week, which I think is a shorting opportunity, because they are, I think, at a point where competition is going to run them down. And while I don't want to tell you too much, as you can see, Disney gets a huge move on the upside. And again, I want you to note the cyclical rhythms. We watch for money flow. That's really what this is. And I remember I just showed you that last pattern where I said big up and a small correction gets you another big up. Well, that worked perfectly there, right? Well, this is unusual. It's getting all the way up to the 78.6% after this negative cycle, but the bottom due right there, and there's the big pop. So Disney looks much improved to us. This is a much better pattern. It likely will get a pullback, and that pullback is likely a buying opportunity. The last stock in the best of the week that we're going to look at is NVIDIA. This is a stock that everybody loves, right? Because, well, their chips are in high demand based on the blockchain craze that's going on. And I think blockchain is very real. You notice I didn't say Bitcoin because I think Bitcoin is not so real. And blockchain is going to be massive, and Bitcoin's, well, going to be maybe a massive crush pretty soon. So here we are in NVIDIA gaining 5% on the week. Earnings great. Analyst upgrade all over this thing. However, you know, you got to look at this and say 200% gain 2 years ago, 100% gain this year. It's likely to get tired in here. And earnings great, growth great. You know, one little sniff that blockchain is slowing down a little bit, and, you know, this is a resistance area right there. It probably pulls back. I think it's a mistake to be buying it right now. There's got to be better times to make an entry in here, and that actually is our best of the week. Coming up is the worst. Well, for the worst of the week, some of the bad stocks have been stocks that have gone from bad to worse. We're going to show you a couple of those in here. First of all, Pandora sinks into the $4 range. We have not liked this stock, and basically it's because the model has not been competitive. They haven't shown that they could monetize their streaming music. Apple, a huge competitor in that area, and other competitors around. Remember that, because I'm going to talk about Netflix in a moment. And this stock has gotten annihilated. Now, it's come down to this $4.50 area, and that's really an area where it's kind of too late to sell, and maybe somebody comes and grabs them up because, well, they've gotten so cheap, and somebody with an expensive stock and a big currency, they'll maybe come in and be interested in it. Here's the lows as they were projected, and you can see right in there. So every time you get into a rising phase, that's right here and here and here, and this crummy little one that failed, look what that did. That brought it all the way down to here. This rising phase here, and you can see our projection. There's a rising phase there. So Pandora down 20% on the week. Analysts downgrade the stock. Earnings were okay. They came in as expected, basically, but investors are just frustrated by this model failure. So the likelihood is that we're going to get some kind of a dead cat bounce that starts pretty soon in Pandora. Another P stock we're going to look at is PAAS, and that is Pan American Silver. Now, the silver and gold, they've been looking, well, really kind of weak, and of course the dollar's been stronger, and we've got some frustrated longs in here also. Now, this has our colored phasing in it. And what that does is help our chart subscribers see where there's a rising phase, like you see right in here and right in here and right in here, and when there are corrective phases, like you see, well, right in here and right in here, and the one we're in here. When it turns red, it broke cycle support, and that's a time where there's a lot of risk. and that likely declines into the end of the year. This is around January 1st, so PAS moves to the downside, and it's likely to continue to struggle. And we kind of think that's the case for the GDX and for most of the other gold miners between now and towards the end of the year. But at some point, come December, January, we think there's an upside explosion coming, and that's related to, well, the reason that people buy Bitcoin in a tiny little market like that or other cryptocurrencies, well, they'll figure out that there's a reason to believe in some of these precious metals for the same reason. So let's take a look now as we switch over to TripAdvisor. Trip had a bad week, as did Priceline. Their earnings beat, but their revenues were really crummy, and the stock fell 20% on the week, 14% in one day. So it was an ugly picture for TripAdvisor, TRIP. While this looks bad, it might be a little bit late to sell it. Here's some more lessons on cycle analysis for you. You can see that what happened in here was that, well, you had a decent sideways cycle in here, but here's where you had a rally and it broke below the key number. Once it does that in the corrective zone, there's a lot of risk. It actually did that over here too, a lot of risk, and it did it just now this week. This decline comes out into December, so we're not in a hurry to buy Trip right now. We think that it's got about a month's time before it is buyable. That's a really good example of a downward slope in there that has been, well, really ugly. But Priceline, PCLN, this is had been an enormously high price stock. You could see that, well, it's actually a head and shoulders. We don't really have it drawn in there. This cycle right in here that you can see, that made your left shoulder and your head right in here. This cycle rallied and failed. See, we're underneath the support right there, and that made your right shoulder. So there is a big downward objective in here. You see, this is 2067 down to 1780 approximately. That's 280 points. That would call for a decline all the way down from 1780 to about 1500 based on the measurement. So this is an ugly pattern. This goes along with Trip being ugly, but this is a breakdown near the highs. Trip is already near the lows. So if you get a rally in Priceline and you're long this stock, man, oh man, I think there is some significant risk in there. Take a look at Allegheny ATI. That stock is down 13%. This is in the steel category. This is an interesting one in that this dashed line in here is the DBB. That's the base metals. And this dotted line right over here, you could see, is kind of a little revised cyclical pattern that we put in there. This is not one we look at that much. And we believe that this shakeout right over here is due to the fact that, well, they came out with a secondary offering, a stock offering, and they discounted it 5.8% in order to get it sold. It got sold around $24, and then the people that bought it got hung, and it's traded down to $22. We think it's going to bottom in here soon, and that this actually will be buyable, and we actually like the steel stocks for coming months, so we think that this one is pretty buyable also. That's a look at Allegheny. The next two stocks we're going to look at are stocks that we always want to bring something that we think is very actionable, and that is not what happened, but what is likely to happen. Well, take a look at Netflix. Here's what I think is going on in here. So first of all, their PE is enormous based on their projected earnings in 2018. The forward PE is 87. I mean, that is bubblish if you ever saw it. Now, you can see the cyclic rhythms in here, right? So good bullish pattern here and here and here. That's these 1, 2, and 3 cycles that you can see right in here. This one turning over now. You could see the evening star right in there as it gets up to those, right into the fib confluence area of projections, and now starting to roll over. And with this Disney news that come out and all of the other companies that are likely coming out, Amazon, a huge competition with Amazon Prime. Netflix raising their prices significantly more than Amazon Prime is, and Amazon, that gives you all the free deliveries and all that. This is unbelievably, to me, a screaming sale. I think the first stop on the downside here is around this 179, 180 area, and that's just the first wave down. I think that Netflix is in a lot of trouble. And, of course, that's my analysis and my opinion, but, well, that's what you pay me for, right, to see this show? Well, you don't really pay me, do you? So now we'll take a look at Humana, HUM. And here's something that is also similar. So this one has got minor cycles within the bigger cycles. Here you can see the big cycle right in here and the two small ones. That's this and this. You can see that. And the big cycle right in here and the two smaller ones. And the big cycle right in here. Whoops, it's pointing down, isn't it? Double top right in here. Evening star, big failure. If it gets under this level right over here, man, it's going to point way down over here. When is the time we expect the low to come? Out here in late January is when that points to. We think this is a major top in Humana and look for major decline going on in there. So that is a look at the worst of the week and two stocks that we think are screaming sales right now, Netflix and Humana. What comes next? Well, that's our short-term view for the coming week. All right, short-term view for the coming week. Do this every single week. Before I get into that, let's just talk about what happened during this last week. We have the stock market just having basically small losses, not a lot much going on. The bond market being affected by news potentially out of the tax plan as the junk bonds are moving down sharply. As I showed you, that's leading treasuries to the downside. So treasuries 30-year fell over 1 point to the downside for the week. Moved up early in the week, I'll show you, but then failed and pretty close to our objectives on the upside. The 10-year notes move up about 4 basis points in yield. Dollar modestly lower, pretty much per our script also. But we think the dollar is going to firm in the next week, and that's probably going to cause some more pressure for the precious metal stocks. I'll show you that. Gold for the week as it just about chops around, gets some gains, but then Friday has a pretty big hit, and that wasn't caused by the dollar. Looked for news, couldn't really find anything. World demand in gold is dropping off, and part of that is because of India's tax reform going on there, and of course there's a lot of distraction as people move into Bitcoin. Like I said, I think that's going to change around before you know it. So gold is got weighed on late in the week, but still had some small gain. Same thing for silver, which moved up a couple pennies, and again they both pretty much did what we expected. As far as the oil market, well, that was up on Monday, giant, and then just stopped and moved sideways for the week, gaining about $1.35 on the week. So now let's take a look as we switch over and look at our short-term view for the coming week. We do this every single week, and we take kind of an accountability of what we saw coming for the last week. And our goal is try to be right twice as often as we're wrong, and we're going to give ourselves about 60 to 63% correct for the week as we reviewed everything that we thought was going to happen. So what we're going to do is only look at daily charts, and we're going to look at light crude, the dollar, the euro, gold, silver, the bond market, and of course the stock market. So we'll switch over now to the daily chart as I look at SPX. Let me get that up for you right here. Now we're going to start with light crude, of course. What am I doing? All right, here we go. Light crude on the weekly chart. And weekly chart I don't want to show you. See, I'm messing up here. Here comes the daily chart right here. And like I said, light crude had a bounce and then turned back sideways in here. And our upside objective for the week was only up to about 55 and a quarter. Of course, that was 6 days because we did the show last week a day early on Thursday because we were going to the Las Vegas Trader Expo, which was neat. And are you watching me now that I met out there? Thanks for saying hi to me. So here's light crude. And what we're looking for in here, well, let's just look at the smaller pattern. So when you get a big upward move in here, a lot of strength, in cyclical analysis language, the smaller patterns get swamped. In other words, the upward bias is so strong that it's kind of hard to see the smaller patterns that are right in here. This one is very visible. You can see that right here. It's very clear. This one not as clear right in here. And this one in only its rising phase right in here. And that's what you have. And our option bias indicator has turned extreme overbought. So what that says to me is that a reversal is pending. And so our subscribers get that on all the charts now. And what that says to me is that, well, we're probably making a top in here. So that's what our projection is in here. You're probably going to have a little dip for the week right in there that, might get you down to 55.90. That's that minor 23.6%. And then another rally, and then you probably get a little bit more correction right over here. So we're looking for some choppiness in here. So we'll call it dip and then back up, and probably not making a lot of ground and being kind of stuck in this range right in there, 55.90, 57.90 for the coming couple of weeks. I want to just make a note that natural gas is a much improved pattern. So those of you that are natural gas traders, it has gotten up to a level that says it has very much repaired itself, and would be a dip buyer in there. Take a look here as we look at DXY, which is the dollar index. Now, you can see in here clear patterns as it's following the pattern exactly. We said small down week that it was likely to get to 94 or a little bit lower. It just missed 94 over here in that minor support area. You can see the upward bias that's right in here. So this still says that the major trend that has been pushing it up, at least major for a daily trend, is still in play, right? And now we're getting to the point where this bottoms and then turns up. So we're looking for, a little dip in here, maybe 94-ish or so, and then turn back to the upside again. This is probably a time period where maybe gold and silver even get weaker if that rally comes as expected. But this to us is the sell area right over here. This is likely to set up a big decline coming in the dollar. So we think that's in a couple of weeks out there. That's a little more than our short-term view, but we're going to call this week down a little bit and up, but risk growing. When I look in, now remember here, we're looking for, this is about a week or week and a half rally there in the dollar. If I switch over to the euro, because it's inversely correlated, you'd be looking for a week or a week and a half decline. And that's exactly how this is set up right there. Like we're looking for a decline right over here, and then it's set up for an intermediate bottom to come and then move up. So this is where we think the euro currency moves up sharply. That's where we think the dollar moves down sharply, but that's about 2 or 3 weeks out. So for this coming week, we see a little rally in the dollar. We see a little dip, a little decline coming in here in the euro currency. For the gold market now, /GC. So what we expected in the last week was that it would have a small move up, a choppy move to 1288, and then stall. Well, you can see right in here that the high right there, 1289. So that was, well, I'd call it spot on. It did exactly what we thought would do, get into the minor resistance zone. And remember, I said dollar up, and that usually is coming for the next week or week and a half, usually is inverse to gold, and here's your week or week and a half on the downside in gold. Then you have a better chance of getting a rally out over there. So we're going to call gold, down on the week. We would expect that it would get down to these lows in here of 1265 or a little bit lower in the gold market. In silver, /SI, it's the same thing. Our upside objective in silver last week was 1733, and it got up to 1727. So, just missed the short-term resistance there, and now we expect that it's going to roll over in here and likely to test these lows that are in here somewhere around 16. This is 1680. I'm sorry, 1664 right here. This one is 1659. So it's kind of in that area that we expect to get some downward test. We don't expect a huge decline in here, but it is possible, because if the dollar rally comes as expected, well, that could happen. Now the bond market /ZN. What we said was that for the 10-year that we expected it to rally and then to stall. So we thought that this short-term resistance area was an area that was going to give it some problems, and that it was really underperforming the patterns that we saw in here. So we thought it would get up to 125.19. It actually got right over here to about 125.15 right there, and then you could see it stalled and roll over. I would say that because we didn't call this decline as steeply as it was, we're only going to give ourselves half credit on this. I mean, basically we thought it would stop here and stall, but we didn't really picture the junk bond market coming apart and weighing so much on the bond markets overall, and bond markets around the world under some pretty good pressure. So for the next week in here, we're going to expect a bounce in this support area. The support in here is a 124.21 down to 124.14. The reason we expect this to bounce is that it's kind of a little bit on the early side for a breakdown in here, though anything could happen. And also we think the stock market is going to start to struggle. It's been struggling, and we think it will continue to do so. So we think we're going to get a kind of a choppy week, maybe come down a little bit in here and then start to give you a little bit more rally in there. And I would say compared to the week that we just had, it'll probably be a narrower week. So we're going to call it down and then up, and really a small week, small potential up week. But overall, we got to just say risks are mounting in here, because it's really underperforming a positive window. We'll call that. So we said in here that the 30-year is likely to get up here and test 154 plus. It gets up here to about 154.26 or so, and then rolls over again. We thought it would stall here. We didn't call for this big decline, so we only get half credit on that. And then in here, you could see we're at the supports right in here. So the same thing. We kind of think it's dip and then move up in there, and then kind of struggle in this area. So if we're right about the stock market now, with the longs getting tired and the tax plan becoming a reason for fear, then we think that the bond market really is not likely to give a lot of ground. So we're calling it small up, but we just want to mention that the risks in here are higher than we thought that they were going to be. So that is a look at the stock market. The last thing we're going to, that's a look at the bond market. The last thing we're going to look at here is the stock market. I've got stocks on the brain, that's for sure. We're going to look at SPX. Now, what we thought last week was that there'd be a dip and then maybe a final blip. I mean, that was the articles that we put out basically had that headline. And we thought that the downside would get to about 25.64 and then pop back up. That was a potential minor upward pop, we thought, because we think it's rolling over to the downside. So, for those of you that aren't accustomed to what our daily charts look like, well, you can see in here that this blue dashed line and this blue dashed line are the same. Those are the cyclical patterns. They've been coming to, well, this one was 16 weeks and this one was 22 weeks. So you can see the variance in time frame, days, I'm sorry. The variance in time. This was 19 right in here. So that's about average length is about 19 or 20. And where we are right now is that this low, in other words, the first half cycle there that we were looking for, came right at the spot where we thought it would come down to and then started to bounce. This is the rally that we thought we'd get that would fail and then come down in a big way. You could see our projection right over there. Gets up into those short-term short-term fib projections right there. Here's that dip we thought would happen right to the number, and then getting really a minor bounce in here. What are we looking for in the next week? Well, we're looking for downside. There's a potential it'll try a little more on the upside in here, as you can see, but then we think the risks are really growing after that as these take a hold on the downside. And then what that says is that we're likely to get into this area of support right there. That is probably my most bullish call that I could make on the stock market, is declining into that zone based on what I'm seeing in here. SPX down to 25.57 or 25.42 is my projection for the next week and a half. So in other words, this is day 11, this is day 12. This is about 7 or 8 day period in here that we're looking for decline, 7 or 8 days into this support zone. So that's what we'll consider the first leg of the corrective period we believe we're going into. Then if that's right, you get a bounce, then the next leg comes out over here, and that is going to be probably scarier if all of this lines up the way that we believe it does. For the NASDAQ on the downside, 62.15 to 61.77 is our target over the next we'll call it 6 to 8 days in this first leg of decline. So we think that, basically what we're seeing, we showed you the junk bond market, the correlation. We believe stock buyers haven't figured that out yet, and that we're likely to get into a market that is much more volatility and a lot of potential for some declines that could be significant. I showed you 56 points. Well, that's like nothing, 2%. Or 233 points. Well, that would be like 8%. All of those are well within the norm, certainly for sure. And everybody thinks we're in a new norm. I don't really think so. You got to be really careful because it is so crazy out there. That's the end of the show. And I'm always wishing you great trading.